Gold prices are ending the day down Tuesday, pressured by a stronger U.S. dollar index that was supported by hawkish comments from Federal Reserve Chair Janet Yellen. Joining us now is Frank Holmes of U.S. Global Investors. Frank, welcome back. Good to see you.
Happy Valentine's Day.
And to you as well, Frank. Not so many happy hearts here for gold, which is under pressure this Tuesday, the same day that four Fed officials spoke out in public. What did you make of their statements, and what do you make of what gold is doing and reacting here?
Just short-term noise. I think that they're fully cognizant that a ripping, roaring dollar is going to only hurt economic growth. And I think that that's the real key factor here. So don't get caught up with that head-down noise. Take a look at how well gold's done year to date. It's been spectacular. And gold stocks have been phenomenal. So I think that that's a better place to focus our energy.
And as a segue here, Frank, there was an interesting chart from Credit Suisse, which I saw, relating to this rally that we're seeing in U.S. stocks. They found that last month, the passive active fund flow differential hit a new record, meaning investors seem to have little faith that stock pickers can actually beat the benchmark. So what do you make of this discrepancy? Are investors onto something here?
No, I don't think, I really think that it's a different animal that's out there with all the regulatory rulemaking and has shifted the flow of capital. And I think that soon passive investment is going to surpass 50% of all money out there. And then it'll be much easier for the active manager. But what's really been driving this has been the quant world and the quant fanatics that are out there that understand sentiment, word choice, that look at financials, correlations, patterns. They're the ones who are really driving the high activity in trading gold stocks.
All right, Frank, thank you for that. And, you know, it's a big economic data week. So what's your touchdown pass going to be?
Well, the touchdown pass is going to be CPI. It's coming out tomorrow. It'll recalibrate real interest rates. What is the government going to try to pay you to attract you to buy their government bonds? Take away that CPI number. If it's more negative, gold rallies from there. If it's positive, gold continues a sort of short-term pullback. But I think what's really important is that Bank of America came out with bullish sentiment towards commodities globally. There's more enthusiasm. I think it's really important to recognize that small business in America, which represent most of the job creation, after Trump won the election, went up 5 sigma. And that's what was discussed at the Goldman Sachs conference I went to yesterday. And I thought that was really important because that triggers transactions. Transactions trigger commodity demand, which triggers a rising GDP. And that's why Goldman Sachs has become bullish on the commodity cycle.
Okay, so bullish sentiment you got from that conference yesterday, from even people attending.
Very bullish, very constructive.
All right, Frank. Well, good thoughts from you today. Thanks for joining us.
Happy investing and happy Valentine's Day.
Thank you, Frank. And thank you for watching this edition of Kitco's Gold Report. We'll be back tomorrow.